Hey everybody, Smart Silver Stacker here. So I've got some important gold news to share with you today. News that you won't hear about in the mainstream media. But trust me, this one has the potential to shake up the global economy. And we're talking about Saudi Arabia and China secretly buying gold. And perhaps more importantly, the reason why they are being so secretive about these bullion purchases. Now, I know what you're thinking. Hey, Smart Silver Stacker, what's the big deal? Countries buy gold all the time, right? But there is more to this. The Saudis and the Chinese are way more secretive about their purchases than usual. And when you tie this into the upcoming BRICS conference and potential changes to the way that the Saudis and the Chinese conduct their oil trade, it starts to look like a carefully orchestrated move to challenge the US dollar. So buckle up, there's a lot to cover here. Let's get to it. Thanks for checking out my video today. If you enjoy it and you get some value from it, please do give it a big thumbs up down below. And if you want more videos about gold, silver, and the global economy, why not subscribe to the channel? Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. All right, now let's start with Saudi Arabia because this one is really juicy. Recently, Zero Hedge published a piece titled Saudi Central Bank Caught Secretly Buying 160 Tons of Gold in Switzerland. Now, this article, it cites anonymous sources, so you do have to take it with a bit of a grain of salt, but the author points out that when you compare quarterly sales data for gold from the IMF to the data from the World Gold Council, there are massive discrepancies beginning in 2022, indicating that unreported central bank purchases of gold went through the roof at that time. Over the same time frame, large discrepancies also began to appear between Saudi net imports of gold and domestic consumer demand. Finally, the analyst also compared that discrepancy between Saudi gold imports and consumer demand to Swiss gold exports to Saudi Arabia. And when you look at these charts, along with the claims made by the unnamed sources, it makes a fairly compelling case that the Saudi Arabian Monetary Authority, SAMA, that is the Saudi Central Bank, may be the culprit, buying up as much as 160 tons of gold, but not reporting any official increases in gold holdings. For reference, official Saudi gold reserves currently sit at 323 tons and haven't changed much since 2010. So why would the Saudi Central Bank increase its gold holdings by almost 50% without any official reporting? Well, to answer that question, we've got to remember that gold is the ultimate form of hard money, and when countries start buying it up without telling the world, it usually means they're bracing for some kind of financial shift. And Saudi Arabia isn't just buying gold, they're trying to do it quietly, which makes me think that they are possibly trying to avoid upsetting their traditional allies, the US, while simultaneously positioning themselves for a bigger role in a new financial order. Remember, Saudi Arabia officially joined BRICS this year, and it seems to me that they could be stacking gold as part of a strategy to break away from the Petrodollar system, as BRICS prepares to launch its own currency unit for international trade, a unit that is rumored to be partially pegged to gold. Now, it's not just the Saudis. There is evidence that China may have its own unreported gold purchases. For 18 months straight, China was on a gold buying streak, with official gold holdings rising to 2,264 tons by April of 2024. But then its purchases stopped. China has been on the sidelines of the gold market since May of this year, at least officially. However, Chen Long, an analyst over at the Singapore-based thinkchina.sg, noticed some interesting discrepancies in Chinese gold data, highlighted in this piece titled The Mysterious Gold Buyer in China. Now, first, we need to establish that China is both the world's largest producer of gold and also a major net importer of the metal. And Chen Long noticed that if you run the numbers, the total gold holdings of Chinese retail buyers, banks, and the People's Bank of China actually only rose by 431 tons in 2023. But over the same span of time, China's total gold production combined with its net imports were about 1,775 tons. That is a gap of 1,300 tons. This gap represents the amount of gold that has, quote, gone missing. And in 2022, China's net gold imports and production totaled 1,639 tons, while retail investors in the PBOC bought 853 tons, and the commercial banks actually cut their gold holdings by 600 tons. That makes the gap for 2022 1,382 tons, meaning that a total of 2,700 tons of gold has gone missing in China in the course of the past 2 years, an amount that is more than half of annual global gold production. What could account for this discrepancy? Well, secret buying by the People's Bank of China is not the only potential explanation, but it also wouldn't be the first time. Back in 2015, the PBOC reported an increase in official gold holdings of more than 600 tons, the first such report it had delivered since 2009. It is considered highly unlikely that all 600 tons were purchased in just one shot, and much more probable that they simply stopped reporting purchases for several years. But why be secretive about buying gold this time around? Possibly because they want to continue accumulating more gold without telegraphing the move so that price pressures are mitigated. Gold is already at record all-time highs, and if China announced that it had just more than doubled its official holdings, that could mean that any gold China buys from that point on, well, it could cost a lot more. It's no secret that China has been pushing hard for de-dollarization, and accumulating gold is a big part of that strategy. Gold is seen as a hedge against the dollar and other fiat currencies, and with the upcoming BRICS currency rumored to be partially backed by gold, it makes perfect sense that China would want to beef up its reserves. So what's the endgame here? Well, all of this gold accumulation is pointing towards one thing: the creation of a new BRICS currency. This currency, which was discussed at the St. Petersburg International Economic Forum earlier this year, is being called the unit. Recent reports published by Russian news service TASS suggest that the unit will be 40% pegged to gold, with the 60% balance linked to a basket of BRICS national currencies like the yuan, the ruble, and the rupee. With over 45% of the world's population represented by BRICS and their percentage of global GDP now exceeding that of the G7 nations, this new currency could seriously challenge the dollar's role as the world reserve currency. It would also give these countries more independence from Western financial systems, which often come with strings attached. Now, here's where it gets even more interesting. The petrodollar system has been in place since the 1970s, and it has been a key pillar of the dollar's dominance. The idea that oil is priced in dollars means that countries need dollars to buy oil, creating massive demand for the currency. But China has been petitioning Saudi Arabia and other Gulf nations to accept the yuan in payment for oil and natural gas for years now. In March of 2023, the first such trade took place, with China paying for UAE gas with the yuan. Perhaps more ominous for the petrodollar's future, however, is Saudi Arabia's recent interest in the yuan. Last week, in a speech delivered in Hong Kong, Saudi Arabia's Minister of Industry and Mineral Resources expressed a willingness to accept the Chinese currency as payment for crude oil. If Saudi Arabia, the world's top oil exporter, officially accepts non-dollar currency for oil exports, it could trigger a domino effect with other oil-producing nations potentially following suit. And that would be more than just a shift in how oil is traded. It would be a direct challenge to the US dollar's dominance. And don't forget about India. India recently cut its gold imports tariff by 9%. India has always had a love affair with gold, and now that it is cheaper to import, demand has skyrocketed. This is especially important because India is a BRICS nation as well. They're the I in BRICS. And their increasing gold demand fits right into the larger picture of BRICS nations moving towards a gold-backed currency. India isn't just buying gold for jewelry, they're stockpiling gold bullion. And with their role in BRICS, it is clear that they are preparing for the possibility of a global shift in the financial system. Now, what does this all mean for gold prices? Well, we've already seen gold hit all-time highs recently, and with central banks buying up gold, either officially or off the books, this trend is likely to continue. If BRICS really does announce a gold-pegged currency unit, well, we could expect the trend to accelerate, possibly dramatically. Gold isn't just a hedge against inflation anymore. It's becoming the backbone of a new global financial system. And as countries like China, Saudi Arabia, and India continue to buy, prices are going to go higher. So, what we appear to be witnessing is a coordinated effort by the BRICS nations to challenge the dollar's dominance. With Saudi Arabia and China secretly stacking gold, the possibility of a new BRICS currency, and Saudi Arabia considering selling yuan for oil, the writing is on the wall. Something big is happening behind the scenes, and if you're holding gold, you might just be ahead of the curve. Thanks for tuning in, everybody. If you enjoyed this video, make sure to give it a thumbs up, subscribe, and drop a comment down below. Let me know what you think about secret central bank gold buying. Stay safe and happy stacking, everybody. I will catch you next time. Smart Silver Stacker, out.